with that out of the way, let's talk about our first main topic. And our first main topic involves a company that we frankly don't talk about much on this channel, but we really should have been, because Hertz Cars has actually been very important for gig workers. Hertz set up deals with, I believe, Lyft and I think at one point Uber to rent their cars for rideshare. Now, Hertz has filed for Chapter 11 bankruptcy. I believe it was Chapter 11, which is basically restructuring. They are hoping to restructure their debt and to come out of bankruptcy and still continue operating. Now then, here's the thing. When you file for Chapter 11 bankruptcy, unlike what most people think, it is not a get out of jail free card. It is a stay of execution. You have to go, you don't pay your debts for the time being and you hold off on the interest, but you have to prove to a judge that your company could survive a restructuring. Like, hey, if we pay off the debts and you restructure the company, could you realistically not only survive, but actually thrive? That is the big question. The courts basically have to decide at one point whether or not the company is worth more dead and sold off into pieces than it is alive. Well, that's why a lot of companies never emerge from Chapter 11. However, one thing that did happen during this bankruptcy, if you can believe it or not, is that the Hertz stock went up. And I've been seeing, because I know a lot of friends of mine and some people who are not friends and then people who I'm indifferent about, getting into Robinhood stock trading. Now, I have been buying and selling stocks for a long time, and I would never, ever call myself an expert. But I have watched videos where some people looked at the stock with Hertz being what it is and saying that, hey, it's a risk, but it's got a huge reward potential. And to be honest, I even bought a little bit of Hertz stock just in case. I saw that it was going up. For some reason, I bought 15 shares. And I personally, whenever I buy something on Robinhood, I never tell people you should buy this. I always say this is what I'm buying and here's why I'm going to buy it, but do not take what I say as financial advice. But with the way the stock was climbing, a lot of YouTubers were actually saying you should buy this stock. And if you are one of the people who are buying a lot of Hertz stock or planning to buy Hertz stock because you're hoping for a huge reward, I've got some bad news for you. You are likely to lose, and you are likely to lose big. So much so that I have, in fact, officially sold my Hertz stock. I will show you how much money I lost on it in a moment. But here's one of the headlines from CNBC. Hertz says it expects stockholders to lose all their money in filing for selling more stock. So what's going on? Well, here's what's going on. Hertz Global Holdings warned potential buyers in its common stock offering that it's almost certain that the equity will become worthless. Hertz said in a government filing Monday that it would sell up to $500 million in common stock. In that very same filing, the company said that those shares won't be worth anything unless those with higher priority in the bankruptcy, such as the company's debt holders, are paid in full, and that the company said would only happen if there is an astonishing change in the progress of the C virus and a significant turnaround in travel trends. Basically, this is a no-win situation for you. Now, what does this exactly mean? Well, first of all, why are they issuing up to $500 in common stock? What does that mean? Well, it basically means that they are printing more shares of stock, and they are going to sell more shares of the company. And when they do this, they raise money. But here's the bad thing on what happens when that happens. When that happens, the stock becomes diluted because there's more shares of it, so therefore the value goes down. In that same filing, the company said those shares won't be worth anything unless those with higher priority in a bankruptcy, such as the company's debt holders, are paid in full. Basically, that stock ain't changing the value unless the debt holders are paid and the company starts getting into a more healthy state. And of course, the company said it would only happen if there was an astonishing change in the progress of the C virus and a significant turnaround in travel trends. Now, I do believe there will be a turnaround in travel trends. I think, for better or worse, the lockdown is over. People are definitely done with staying inside. They want to go outside again. I've been surprised at some of the strip malls that I have driven past and seeing how absolutely packed they were. And hey, Disneyland is opening again tomorrow. Maybe today if you're watching the replay of this video as opposed to the live stream. So there is a chance that that thing would happen. But whenever a company starts issuing more shares of stock to sell, be wary. One company that I invested in that did that quite a bit was MoviePass. And I was pretty oblivious to the dangers of what Helios and Matheson were doing. Because I thought, okay, they're issuing more stocks, they're going to raise more money, that should make the company stronger, but it really didn't in the eyes of the shareholders, because it just meant that it was basically like printing money. I mean, some people like to think that we could just print money and pay off all our debts, but the problem is, once you start printing money and you start giving it away, it effectively becomes worthless. Let's even simplify it a little bit more. Pokemon trading cards. Because, for better or worse, a lot of you watching this, especially if you were my age when the Pokemon, or you were, 14 or, 8 to 14 when the Pokemon craze started like 20 years ago, you might remember the Charizard card. And the Charizard card was a rare card in the game that if you got that card, you effectively got your lunch money returned 300 times over, because you could sell that card for up to $500 if it was in mint condition. And the reason you could sell for that much money was a couple reasons. First of all, it was a very popular character, but also the holographic Charizard card was very rare. They didn't make many of them. So if you got it, it was worth a heck of a lot of money. Now, let's compare that to the Charmander card, which was not holographic and actually very common. In fact, you were almost certain to get it if you bought at least 3 packs of cards. Thing was worthless. People paid a nickel for it. And to this day, the Charizard card is still worth more because there's simply less of them, whereas the Charmander card is very cheap to buy because there's plenty of them. Now, that's kind of a very similar thing with stocks. The more stocks there are, the less value they have inherently. Especially since, it's not as difficult to get more shares of stock. So, this is really bad news if you are... Now, if you bought Hertz stock when it was like 80 cents, and then you sold it when it was around $5, yeah, you made out like a bandit. But the Hertz stock, and let's just look it up right now, definitely took a beating this week. It's down to $1.88. So you go to the week, and look, this is where it started going way up. Actually, where was it? At one point it was $5. Yeah, here it is. June 8th. Yeah, June 8th was when it hit its height. Unfortunately, this was also when I bought it. And it looked like it was just going up, up, up. It looked like it would recover, and now it's heading down to, well, before poverty. Now, I will admit, if this gets below $1, I might not mind putting $50 towards it just to see what happens. But when it gets this low, you're pretty much in for trouble. No one's recommending you buy it, although a lot of people are recommending you hold it. I didn't hold it. I sold it today, and I lost $38.91 on this stock. Sold it for $29.18. Not great. Still, for the most part, it's the first stock I've sold since, June. Not June. It's June now. It's May 11th when I sold this stock and lost $12.67, and then it wasn't only last March that I sell another stock and I lost $17. So my wins are still much higher than my losses. Although I will say, just for the record, this Nikola stock has become like a weight. It just really sank, and I'm definitely concerned about this. I have it I have it set to sell at $55, and if that happens, I will definitely lose money on it. But we'll see. Hopefully, it'll go back up again. Like, this is the problem with stocks. It's not a rocket science. You don't know what's going to go up, and you don't know what's going to go down. But the main point is that Hertz is almost certain to go to zero. Yeah. So anyway, here's a bottom line. There's a lot of reasons the stock went up, and there's plenty of reasons why it went down. If there's in fact something to really take away from this, and this is if you're an Uber driver, this might be of real true value to you.
Thanks for sharing your
because
DIY
of the
haircuts, you
I hate it when
savage
that
mole.
happens. Because of the bankruptcy, Hertz is selling rental cars for cheap. Extremely cheap, in fact. So, let's see here. Where can you buy? I was looking at the website earlier with the and there was like 2019 cars that were like less than $10,000 and had 30,000 miles on it. So if you're an Uber driver, you might want to do some research and find out where Hertz is selling these, discounted cars. And it could either be like a backup car, or heck, you know what? If you're doing Uber full time and making $1,000 to $2,000 a week, that would probably pay off that new car pretty quickly. So anyway, that's where we're going to leave this one. Sorry that I kind of fudged on the middle part a little bit, but I would like to know what you think of the stock. Do you have any Hertz stock? And if so, what are you going to do with it? Are you going to hold on to it, hoping that it eventually comes out of the gutter, or are you going to sell it, cut your losses, and just move on? I would love to know. Comment below, like, favorite, share, subscribe.